Oh, we are focusing on the spending for sure. And I think that the critical point over here is, are they going to maintain the deficit target at 3.4% of GDP as was laid out? How are they going to increase the spending right now? And it's critical that they increase spending. And the third point is going to be that, what are they doing in the area of taxation? We have a massive slippage last year. And if you don't have taxes or tax growth, you really don't have an avenue to fund capex, whether it's infrastructure. And the second thing I would really want to see, and this is something that I was a little disappointed with the economic survey yesterday, we focus so much on physical infrastructure. What are we doing about the quality of human capital? That's going to be an issue that's really going to come and haunt us in terms of being able to grow ourselves into manufacturing economy, in terms of supply chain management. And this is something that rather it was glossed over yesterday.
In the year to March, the growth rate for the Indian economy was at 6.8%, which was the slowest level that we've seen in about 5 years or so. Do you think what is likely going to be proposed in this budget is enough to kickstart the economy and get those growth rates up? Or is the administration comfortable with growth at about 6.8%?
It's a question mark, but for that, the one key area we need to watch out is what are they doing in terms of the banking sector, in terms of the broader financial sector. Are they going to adequately work towards recapping the banks? Are they going to tackle the NBFC problem? Because if you look at the sort of Jan to March quarter growth, the credit crunch was very evident in the GDP data. So that's something they need to resolve.
Right. We talk so much, Sanjay, about the fiscal deficit number and how at the central government's level, the number needs to be maintained at 3.4, 3.5%. What about the general deficit, which is including the central government spending as also the state government spending? And that number is north of 6%. Now, do you think that even if the government comes out in the policy statement saying 3.5, 3.6%, but we are going to rein in on fiscal deficit at the central level, would that allay concerns when it comes to the broader fiscal consolidation plan that's been laid out among investors? Because it's still pretty steep when you look at the combined number.
Yes, I think the way I would characterize it is that today's fiscal deficit number is something that's going to be of immediate relevance to the markets. But beyond that, we really need to look at the total public sector borrowing. So that includes the center, the states, as well as the off-budget financing that has increased tremendously. And if you add all of them up, we're running at close to 9% of GDP. And it is crowding out private investment.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.